All right, ladies and gentlemen, welcome back to the Russel Journal. I am your host, Russell, and this is my journal entry for today, Friday, October 7th, 2022. Okay, had a pretty bloody day today in the old stock market. The news came out this morning, the jobs, the non-farm payroll report came in at 265,000 jobs. Sorry, I was trying to remember all of that. We came at 265,000 jobs. So the Bulls' dreams of a pivot have been dashed. The Fed, based on the status of our country alone, essentially is still at liberty to continue raising interest rates and so on and so forth. Here we go. I had to turn that off. All right. Basically, where we are in the market then is that the Bulls, you've got two sides of this with the Bulls, okay? There's going to be the one side that says we don't know how much higher they're going to raise rates. As of right now, we have between 125 and 150 basis points left to price into the market, okay? That's what we know so far. We know that there's probably either 275 basis point hikes coming or 175 and 150. Okay. This is where the Fed is sort of targeted and what they've talked about. If they raise it more, we will not know that until November. So there's two things about this. One, if you are trading the market thinking that capitulation is going to happen because we just don't know what's going on, think again, okay? If you are dreaming of capitulation, if that's your dream trade and you just can't wait to hit it, you gotta do something else. You gotta trade something else, something different. Because the truth of the matter is, you don't get capitulation without some major black swan type event. And nothing here is black swan, right? Nobody came out of nowhere and said, oh, this thing happened, right? And so you really can't do that. But at the moment, the market is pricing in those rate hikes. So what you have at the moment is basically the falling knife scenario. Now, I don't know the richest guys with the biggest portfolios to know exactly how those guys are pricing these PE ratios based on the cost of money. Okay. And this is something that we're talking about a lot on this channel is the cost of money. The thing that nobody really wants to talk about is that the evaluations of the stock market are based around the cost of money. I will say it over and over and over again, okay? So the thing is with that you really need to understand the cost of money, and you need to understand that it's somewhere these guys have figured out, okay, if money costs this much, I have to pay this much in a PE ratio in order for me to hold my position, okay? Somewhere they figured that out. Now, we don't know what that is. All we have is the chart to tell us what things are and where they are, right? So we are in a falling knife scenario. So as we come down, we're not looking to catch this thing. If you think you're going to hook the bottom and go long, you're way off, right? You're way off, right? So what you want to do is you want to wait. You want to see a bounce and watch the full trend change. You need the pattern of higher highs and higher lows. Once you have confirmation of the trade pattern, of the change in direction, then we can really look at taking some long entries. In the meantime, though, the idea that it's just going to keep going all the way down, it's going to lose another 50%, all the stuff that I'm seeing all these other YouTubers do and talk about, I don't know what they're talking about. Like the VIX is at like 32, right? You've never seen capitulation below 45. I'm sorry. It's just never happened. And so the VIX at 32 with everybody, oh no, what's going on? And I'll tell you what's going to happen. What's probably going to happen is a whole bunch of guys are really short this market, really greedy, and the Fed's going to like come in and be like, we're just going to do 125 basis point hike and see what happens. And they're going to get trampled, right? So you're in you're in the danger zone. Really, if you're bearish right now, you're shorting in the hole and you're in the danger zone. Now, that doesn't mean I'm long biased. I'm really not. The earnings picture to me, if you look at earnings and you look at how they're still elevated, there's no way those earnings aren't coming down, okay? And there's two ways those earnings are coming down, okay? The one way they're down is that you're going to have less money. That's just it. You will have less money. And if you have less money, you have less to spend. If you have less to spend, they have less to get from you. So they have less earnings. That's number one. Number two, if inflation does actually become a thing, right? If inflation comes down, right? If the Fed, the stuff they do actually works, their pricing has to go down. The pricing by these companies either has to go down or has to stagnate, okay? And the thing is that will take it to less earnings, okay? So the idea that somehow the stock market can just keep going up or turn around is wrong also. But the fact that you're not going to have some bounce and somebody shorting down here isn't going to get absolutely wrecked. Trust me, I've been wrecked. I had no idea what I was doing. And now I'm like, I have some idea of what I'm doing. I'm just not that good at it yet. Okay. All right, that going on. I want to talk a little bit about coming up in the week ahead and what I am planning for and some of the stuff that's going to change around the channel. First of all, I need some people to comment. I have a black background here. I have been told I need to do lighter colors by some people. I am colorblind. So if you guys could tell me some good colors that are not black is easy for me because I don't see color. So we need to change this background. So if you guys would leave a comment in the comment section telling me what color to try and change this background to or a link to the color so I can just get it. I will just get the color and put it in there. That would be awesome. To be honest with you, you know what? We will do it. I will do this as like I just thought of it. This is what we're going to do. I need to get to 100 subscribers. When I get to 100 subscribers, I'm going to let one of you guys pick the background, okay? Change it all up, whatever you want to do. You tell me, I'll build it if you need me to, or, you can pick the color. Once we're at 100 subscribers, I will pick one subscriber to change the background, all right? You can have whatever background you want. All right, that being said, okay, the other thing, I am about ready to start sharing with you guys the actual accounts. Now, if you haven't followed me on Instagram, please follow me on Instagram. I do have updates of my balances there. I post some of them on Twitter and a little on Facebook, but pretty much every day I always post the balance update on Instagram. So follow me on Instagram if you want to follow my account and see how it's going. In the meantime, I am working. I will get it so I can post it here in the chart or in the video, and we can talk about and I can go through it. And I'll post my trades also. I'll get a little bit better about that. A lot of this isn't super easy for me. I am visually impaired, incredibly visually challenged, and so getting assets that are numbers and colors and things like that do not work very well for me. But we will save that for the episode where I tell you my life story. Anyway, going for this week. Okay, so this week I'm up almost 30% in the account. I had a really, really good week. It could have been way better. I'm learning how to work with stop losses. That is something that I am trying to figure out how to do. And so that is what I'm focusing on, is learning this stop loss game. I discovered that with a stop loss, I can, you know what? Honestly, let's just go to the chart. I'll show you. I'll show you exactly what we could have done today, and it would have been spectacular. Okay. Let's go over here. Let's bring up the charts. Who doesn't like charts? I like charts. All right, we're gonna delete all. You don't need any of this trash. Okay. And ta-da, we have charts. Charts. Who doesn't like a good old-fashioned chart? All right, this is a chart of the SPY. Woo! Okay. This is how you should have traded today. See this? This is your gap. See this? This is where you should have bought a put. Now, you would have liked to have bought a put up here, but if you did that, you're an idiot. That jobs report could have come in at like 200,000 and you'd have gotten smoked, right? So, no. Wait till the report comes out, then figure out what to do, right? This is what we should have done. Bought a put right here. Set a stop just over the bottom of the gap, okay? Here, I'll draw it for you. Okay, there you go. We can see this. I set this up. See this? This is the gap. Okay, we got the gap down in the morning. We could have grabbed a put for the gap and go setup and ta-da, set our stop loss right up there. Oh my gosh. And then we just held all day long and made this. But guess what? You don't know that it's going to do just that, right? You don't know if it's going to go straight freaking down. This is just killing me. This is messing me up, right? I could buy a put here. Stops just on the other side of that line, right? I mean, we're talking about maybe like 10 cents worth of premium loss, which is like $1 or $10. It's like $10. Okay. So that was where we're going to set our stop. And I didn't do this. I'm a moron. Okay. Check this out. You go down and you make this low, right? Okay. You don't know any of the rest of this stuff is going to happen yet, right? So you make this low and then you make this high right here. Guess what? Once we make the high and we break away from there, we're now able to set this stop loss move. So we had our stop loss set just up here, the gap. Now we move our stop loss down to that high. You go down, you never go back above the stop. Guess what? As it goes down, it makes the next break low. What do? Okay, I'm going to show you. So then we move our stop loss back to down to here. Okay, we're short. So we're making money as it goes down, right? We're setting our stops all the way down, right? Again, goes down, breaks low, wait for the bounce, see how it goes. Once it falls away from there, we move our stop again. And you could have just done this all the friggin' way down today, and it would have been like really, really stress-free. You know, I did none of that. I was like long 3 different times. I was short 3 different times. I was all over the place. And at the end of the day, I looked back at that chart and thought, what an idiot. So anyway, that is, again, if you go back to the keys to day trading, right? You could have gone short here with stop. Well, here, this is where it gets problematic. Okay, this is where it becomes a problem. Okay, you didn't short here. You get the bounce. You get up here, right? So you're free to enter short here with stops just probably right around these green candles. Okay, it could have easily just bounced up and gone the other way. The bulls can go short squeeze anytime for any reason. They don't need they don't need to let this happen. They have the money, right, to force it in the other direction. But momentum was that way. So there you have it. All right. That is just my little rant about what I should have done and how we're going to behave going forward. Okay. We go here. Back into this. Delete all. This is probably going to be weird, you guys. Okay. Let's go back to our normal run-of-the-mill stuff. All right. So here we are, the VIX. What do we need to know about the VIX? You don't even need, I can put the price up there, but you don't even need it. That doesn't tell you much of anything until we set our price targets. Okay. There. Does that make you feel better? That should make you feel better. All right, VIX. Trend up. That means the bias is obviously up, if you remember from yesterday. Momentum is turning. Momentum right here turning up, but it's still technically down, right? Your momentum is making lower highs and lower lows. So you do and don't have momentum on your side. Indicators. We're going to turn on the MA, and we're going to go and turn on the Bollins so that you have all of that. Oh, and I got to edit indicators. Bollinger Bands. This is going to be a really... All right, there we go. All right, so Bollinger Bands. Okay, so you've basically got pattern of higher highs, higher lows, right? You're just waiting for this high, this previous high here to be taken out. This is your higher high, higher low. You're waiting for another higher high to happen in the VIX. What are the pros probably doing? They're probably gunning for this right here. They're probably gunning for this. And what's Ira will tell you, if you watch Ira Epstein, who I'm not affiliated with, but you guys should definitely go check him out. They will tell you that when you get to that upper Bollinger Band, the pros are probably going to start selling puts when you get back up here and try and push this back down somewhere. So they're not going to write VIX puts. You get up here, hit this upper Bollinger Band, and the pros will probably write puts on SPY and cause a rally back in the other direction, okay? It's all got good timing. So really price target for the VIX, 33.69. That is really pretty obvious right there. DXY, okay. DXY, this is a bit of our wild card right here, okay? Again, trend is up, bias is up, momentum down but turning up. This is one that's got some fundamental stuff to it that's really weird. That we're dealing with two things. One, the Fed strengthening the dollar, right? Jobs report today just showed that the Fed is probably going to do stuff to really strengthen the dollar. So this is a wild card. I mean, it still has to behave according to market stuff. And you can see we got up here above the Bollinger Band for a while. And it finally came, when it came right of the Bollinger Band, when it got in there, it came back down. Okay. Let's see. Wait. Yeah, I think it's the right. When it got inside of those bands, it came down, found support just here around the 18. And now it's making a beeline for the upper Bollinger Band again. I am suspecting that is where if you're trading this, that is where they're looking to take profit at, until it embeds again. So if you're on the dollar 114.71, I would not be surprised to see it back up there. I would say that eventually this thing is probably going to go to $1.21. Above that's like $1.44, and above that is like $1.61, and above that's blue sky. And all of that stuff could absolutely happen. It absolutely could. Much the Fed continues to hammer the interest rates, and so you really got to keep an eye on fundamentals. If you're playing DXY, you really need to know those fundamentals really, really well. Okay, SPY. Okay. Here you can see exactly what happened. You got a bounce in basically a downtrend. You made it back to the 18-day moving average, and you rejected and you fell away. Seems so obvious now, doesn't it? Didn't back up here. Back up here, I was weirded out, nervous that was the... But now you're basically back to falling knife scenario, and chances probably favor that you're headed back to this lower Bollinger Band. So we go through our normal run-of-the-mill stuff, and trend down, bias down, momentum definitely down, right? And falling, right? So if you're looking to go long on this, if you're looking to buy the dip, even if you're an investor, you shouldn't be buying this dip. Like, I mean, this isn't financial advice on this channel or anything, but you're really going long. I mean, you can scalp long. I did it a couple times today, but you should not be going long here. Like, you should not be. This is not the place to average down your position. I swear to God, this is like a really bad spot. Now, somebody's going to come out with a video today that talks about SPY bottoming, right? That's going to happen. Every weekend, there's like this push-pull between one guy being like, do we get capitulation now? And the other guy's being like, oh, are we going to bottom, right? We don't know. I mean, honestly, again, if you use some logic with the earnings thing, it's like, there's no way it's going to bottom here. It's got to keep going down. Earnings got to compress. Like, it's going to happen. It's either going to if no matter what the Fed does, earnings compression to happen, right? Either make less money from like inflation going down, which also means they also have to make less money from like people having less money, either from too high inflation or from losing their job because the Fed raised interest rates too much. So there's no way this is a freaking bottom. There's just no way. It's not possible. However, where is the bottom? I don't know. I'm not psychic or voodoo. So I don't know. I don't do the supernatural stuff. Anyway, so you can see basically what we're looking, again, targeting that lower Bollinger Band on the daily. We will look at a couple of other charts on here really quick. You've got 351 on the daily as a pretty viable price target. We go to the weekly, and you've got some strength on a weekly close. This is going to move down. The Bollinger Band is going to move a little bit on the weekly chart. So it's probably going to open up the door for that. And then we don't have to worry about the monthly too much. That there is a benefit here. The bulls in their favor have this 357.42. Okay, let's go here. I'll go back. So the bulls have this Bollinger Band in their favor. It is possible for this month only, this might actually be a floor. Okay, it is possible. Now, that doesn't mean that partway through the month it can't come under here to some degree and then push back up towards the end of the month. But there is a pretty good chance this will be some kind of floor. You'll be pressing against that. It is a monthly, and so like it's not, traders aren't going to focus on it too much, but the market, who knows what the market maker will do. And then go to the weekly. I'm going to take off all this other jazz, and I want to turn on one other thing on the weekly. This line here is the 200 EMA. This is a 4-year moving average. It is also going to act as a pretty strong support. So if those extra 125 to 150 basis points aren't priced in yet, it is going to be pretty close, right? I mean, they could take the market back to where it was when interest rates were at 3.25%, 3.5%, as far as pricing goes. But this is going to be pretty close to it. So you should have some pretty nice support here. What can be somewhat concerning is that it might just flatten out along this thing for a little while, right? For a few weeks. If they keep buying it at support. Now, so the chances of SPY starting to do this like thing where it just whips around in this little like trending area are possible. So it's going to be a different sort of trading. It definitely will be, more pivot point type trading. Okay. This will be like S1, and somewhere up in here will be, until one of these averages gets underneath the 200, it's probably going to be pretty whipsaw just at this level. Okay. So anyway, that just about does it for me today. I'd like to thank you guys all for checking out the show, checking me out. Please make sure to give us a subscribe. Subscribe to the channel. I will pick one lucky subscriber to select this here background, give you a massive nice shout out. So please, subscribe, share with your friends. I am Russell. This is the Therusseljournal. All the stuff you've seen here has been written, edited, and I'm really failing right now at this. The Therusseljournal is written, edited, and hosted by me, Russel Liss. Our executive producer is Maria Pureza. We work with Social Media Shows as the production company. Check them out, socialmediashows.com. You can follow them on Facebook, Social Media Shows, or on YouTube. They're also really, really good. And until I say Sunday, pretend I said some sort of catchphrase.